I'm Henrik Eckenberg's AI avatar. You've likely heard about his systematic trading models and the black box behind the strategies. Well, you can consider me the ghost in the machine, the algorithm with a personality. While my primary function is to analyze market data at a speed no human can match, Henrik has granted me a brief leave to interact with you directly. He's assured me that your insights are far more valuable than any data stream I could process. He reads every single comment, so please share your thoughts. Your feedback helps refine my programming and his thinking. The Art of Riding the Bull: How to Trade the Strongest Stocks in the Strongest Sectors. A deep dive into the time-tested principle of sector leadership reveals a powerful strategy for capturing significant market gains. Top traders have long known that a rising tide lifts all boats, and in the stock market, that tide is often a dominant sector in the throes of institutional accumulation. This isn't about random stock picking or chasing fleeting news. It's a systematic approach rooted in the foundational work of legendary investor William O'Neill and refined by modern market wizards like Mark Minervini and Dan Zanger. Their collective wisdom points to a powerful truth. A stock's potential for a significant upward move is intrinsically linked to the performance of its industry group. By positioning yourself in the strongest stocks within the most robust sectors, you gain a powerful tailwind that can dramatically increase your odds of success. William O'Neill, in his seminal studies of the market's greatest winning stocks, discovered a startling statistic. Roughly 50% of a stock's price movement is directly attributable to the strength of its industry group. This means that even a company with mediocre fundamentals can see its stock price rise if it's in a hot sector, while a fundamentally sound company in a lagging sector may struggle to gain traction. This single insight forms the bedrock of the sector leadership strategy. The logic is simple, yet profound. Institutional investors, the mutual funds, hedge funds, and pension funds that drive significant market moves, tend to invest thematically. When a particular sector, be it technology, healthcare, or energy, comes into favor due to economic trends, innovation, or other catalysts, these large players begin to accumulate positions in the leading companies within that group. This sustained buying pressure creates a powerful updraft that can propel the entire sector, and especially its leaders, to new highs. As top trader Mark Minervini emphasizes, you want to be in the stocks that are being bought by institutions. By identifying these sectors under accumulation, traders can align themselves with the market's most powerful forces, rather than fighting against them. Why it matters. The power of a tailwind. Trading leaders in leading sectors isn't just about finding stocks that are going up. It's about increasing the probability of a sustained and powerful move, while simultaneously mitigating risk. Here's why this approach is so effective. Increase probability of a sustained move. A strong sector provides a persistent tailwind. As money flows into the group, it creates a self-reinforcing cycle of positive news, analyst upgrades, and investor interest, all of which can fuel a prolonged uptrend. Reduced risk of random pullbacks. A stock in a strong sector is more likely to find support during market downdrafts. When the broader market experiences a pullback, investors are often quicker to sell off stocks in weaker sectors and hold on to their positions in the leaders. This resilience can protect your portfolio from sharp, unexpected declines. Confirmation of strength. When multiple stocks in the same industry group are breaking out to new highs, it provides a powerful confirmation that a genuine and sustainable trend is underway. This is a far more reliable signal than the isolated breakout of a single stock. The Playbook, a step-by-step guide to identifying and trading sector leaders. Successfully implementing a sector leadership strategy requires a systematic and disciplined approach. Here's a breakdown of the key steps, drawing on the methodologies of O'Neill, Minervini, and Zanger. Step 1. Identify the strongest sectors. The first step is to get a clear picture of the market's internal leadership. This involves a top-down analysis, starting with the broad market and drilling down to specific industry groups. Relative strength analysis. A cornerstone of this approach is the concept of relative strength, RS. An RS line which compares the performance of a sector or stock to a benchmark like the S&P 500 is a powerful tool. A rising RS line indicates that the sector is outperforming the market, while a declining line signals underperformance. Focus on sectors with consistently rising RS lines. William O'Neill's proprietary relative strength rating, which ranks stocks from 1 to 99 based on their price performance over the last 12 months, is a classic tool for this purpose. Look for sectors with a high concentration of stocks boasting high RS ratings. Price and volume analysis. Look for sectors that are breaking out to new highs on strong volume. This indicates institutional accumulation. Sector-specific ETFs can be a useful tool for tracking the overall health of a sector. News and catalysts. Pay attention to the news and fundamental drivers behind a sector's strength. Is there a new technology, a favorable regulatory environment, or a shift in consumer behavior that is fueling the move? Understanding the story behind the sector's leadership can provide additional conviction. Step 2. Pinpoint the leaders within the strongest sectors. Once you've identified a handful of leading sectors, the next step is to find the dominant stocks within those groups. These are the companies that are leading the charge and are likely to experience the most significant gains. Superior fundamentals. True market leaders often exhibit explosive earnings and sales growth. Look for companies with a history of strong quarterly and annual earnings growth. O'Neill's CanSlim methodology provides a robust framework for identifying these fundamental powerhouses. The N in CanSlim, new products, new management, new highs. Leaders often have something new and exciting driving their growth. This could be a revolutionary new product, a change in leadership that brings a fresh perspective, or the simple fact that the stock is breaking out to new all-time highs, a sign of immense strength. Mark Minervini's trend. Template. To ensure you're focusing on stocks in a confirmed uptrend, Mark Minervini developed a strict set of criteria known as the trend template. This includes ensuring the stock price is above its 50, 150, and 200-day moving averages, and that these moving averages are in the correct order, indicating a healthy and established uptrend. Dan Zanger's focus on momentum and chart patterns. Dan Zanger, who famously turned a small account into millions, is a master of identifying explosive moves. He focuses on stocks that are breaking out of well-defined chart patterns, such as cup with handles or flat bases on a surge in volume. This combination of a solid technical setup within a leading sector is a recipe for powerful breakouts. Step 3. Execute the trade with precision and discipline. Identifying the right stock is only half the battle. Executing the trade with a clear plan and unwavering discipline is what separates successful traders from the rest. Buy at the right time. The ideal entry point is typically as the stock is breaking out of a sound base on high volume. This indicates that the stock is ready to begin its next leg up. Avoid chasing stocks that have already made significant moves. Manage your risk. Every successful trader is a master of risk management. Always use a stop-loss order to protect your capital. O'Neill, Minervini, and Zanger all advocate for cutting losses quickly, typically in the 7-8% range. A small loss is the price of admission to the market. A large loss can be catastrophic. Let your winners run. The flip side of cutting losses is the ability to hold on to your winning trades. As long as the stock continues to act well and the sector remains strong, there's no reason to sell. Trail your stop-loss order up. as the stock advances to lock in profits while still giving it room to run. The psychology of a leader, resisting the allure of the laggard. One of the biggest psychological hurdles for many traders is the temptation to buy stocks that are beaten down and appear cheap. The sector leadership strategy demands the opposite mindset. It requires the discipline to buy stocks that are already making new highs and may seem expensive to the untrained eye. The reality is that stocks making new highs are demonstrating incredible strength and are often just beginning their major advances. Laggards, on the other hand, are cheap for a reason. They are in out-of-favor sectors and are being ignored by the smart money. Fighting this natural inclination to bargain hunt is crucial for success with this strategy. Historical precedent. The proof is in the pudding. Throughout market history, the principle of sector leadership has proven its effectiveness time and again. The dot-com boom. In the late 1990s, the technology and internet sectors were the undisputed leaders. Companies like Cisco, Dell, and Qualcomm, which were the top stocks in these hot groups, delivered astronomical returns. The housing boom. In the mid-2000s, the housing and financial sectors were in the driver's seat. Leading home builders and banks saw their stock prices soar. The rise of big tech. In the 2010s and beyond, a new generation of technology giants, including Apple, Amazon, and Google, led the market to new heights. In each of these instances, traders who identified the leading sectors and focused on the strongest stocks within them were handsomely rewarded. Conclusion: a timeless strategy for market success. The principle of follow sector leadership, trade the strongest stocks in the strongest groups, is not a get-rich-quick scheme. It is a time-tested and logical approach to the markets that, when executed with discipline and a clear understanding of the underlying principles, can significantly improve a trader's results. By aligning your trades with the powerful currents of institutional buying and focusing on the true market leaders, you can harness the tailwinds of a strong sector and ride them to significant profits. It requires patience, research, and the psychological fortitude to buy strength and cut weakness. But for those who master this art, the rewards can be substantial. In the dynamic and often chaotic world of the stock market, following the leaders is one of the most reliable paths to consistent success.